What's up guys? Welcome back to the channel. In today's video, we're going to talk about the stock market and how crazy it has been acting lately. As always, before we go any further, I must say that I am not a financial expert. I am not a financial advisor. This video is for entertainment purposes only. Do your own research. And let me clarify what I mean by I'm selling all of my stocks. I mean I'm selling all of the stocks that I was holding in my ordinary brokerage account with Charles Schwab. I still have a Roth IRA with Vanguard, and then I have the government's 401k option, which is the government TSP. In both of those accounts, I just buy S&P 500 index funds. I'm not going to try and time the market. I turned 60 in 2044, so I feel like with another 24 years, if there is a dip in the market in the near future, I have plenty of time to recover. There's no reason to sell those funds because, once again, there's a 20-year time horizon on investing. But all of the stocks I was buying in my Schwab brokerage account, I was only planning on holding for 3 to 5 years. I generally want to be a long-term investor because I only want to pay long-term capital gains tax. But just with what's been going on in the market, I looked at it and I said it's just not worth the risk. And let's just do a quick recap of everything that's been happening the last 2 months. The markets bottomed out on March 23rd. The S&P 500 went as low as 2,237. The markets peaked on February 19th, where the S&P was 3,386. So from the 52-week high to the 52-week low, that was a 33.9% drop in the entire market. However, since the bottom on March 23rd, it has now gone back up to 2,863 as of Friday, May 15th. So that is a 27.9% increase in the market since it bottomed out. Now yes, since the peak on February 19th, we're still 15.4% down from the all-time high. But when you just think about valuation of the market, it just doesn't make any sense. And I almost perfectly timed it when I initially bought into the market. I put about $4,000 initially in, and then every paycheck, so every 2 weeks, I've been dollar cost averaging in about $1,400, $1,500 every 2 weeks. So in the last 2 months, I put in to my Schwab brokerage account about $10,000 of my own money. And I'm currently up almost $1,900. I took a screenshot of my account on May 11th, and I was way positive on almost all of my stock picks. The only bad one was Cincinnati Financial. It's an insurance company that didn't include a virus clause in all of its insurance policies, so they're going to lose a lot of money. But the rest of the companies that I chose were doing pretty good up until this week. And when you just think objectively about where the market is at today, the market at 2,863, that is exactly where it was on August 23rd, so 9 months ago. And 9 months ago, investors were all high-fiving each other, thinking about how great the economy was, how positive everything was looking, you know, lowest unemployment, highest productivity. So the fact that the market today is being valued the same as it was as 9 months ago, that is objectively insane. And I personally just don't believe it. You know the expression, be fearful when others are greedy, be greedy when others are fearful? Well, when everybody was selling off 2 months ago, I thought this is the perfect opportunity for me to be greedy. However, it went up too fast. You know, I was expecting the market to slowly recover and not be where it is right now. And everybody else who has money must have been thinking the same thing. Everybody was just buying back in and buying back in, completely ignoring the metrics, the valuation, the future PE ratios, the price to earnings. It's bad. It's really bad out there. Here's a Washington Post article that reads, "Unemployment is so bad that these economists are proposing a new way to measure it." So the official unemployment rate last month hit 14.7%. When the unemployment numbers for May comes out, it's going to be much higher. This is the highest levels that we've seen since the Great Depression. So this is worse than the 2008 financial collapse. It is going to take years to recover from this, potentially 3 to 5 or more. And I just don't know if we'll ever actually get back to the same unemployment levels that we saw earlier this year. The US economy might never make it back down to less than 3% unemployment. On top of all that, we have to remember that we live in a global economy. This virus is impacting every economy in the world. So unemployment rates in Europe affect us. Unemployment rates in China affect us. There are entire industries virtually making no profit right now. The oil companies are a good example, in addition to the cruise lines, the hotels, the airlines, anything to do with live entertainment. We're most likely not going to have sports for the rest of this year. Taking on loans and taking on debt by these companies really is a short-term fix, a couple months at best. They cannot survive through the rest of 2020 without actually earning a profit. First quarter earning reports were bad, but you have to remember that January and February were operations as normal. It was mostly just March where things became interrupted. When we think about or look forward to the second quarter earnings reports, they are going to be a disaster. Even as things open back up, roughly a third of the American population is still not going to leave their house. My parents are not leaving the house. They're in their late 60s. They are not spending money. They are not going places. They are not doing anything until the vaccine shows up. So with all this doom and gloom, you have to ask the question, who is buying into this market right now? When you look at the actual metrics, the valuation, the S&P 500 now trades at 22.5 times projected earnings, the most expensive valuation since October 2000 during the bursting of the dot-com bubble. A quick refresher on the dot-com bubble bursting back in 2000, if you just look at a company like Intel, Intel's share price today at 58 is still not trading where it was in October of 2000. So in October 2000, trading at 73, the share price for this company has not recovered from the dot-com crash 20 years later. So the question begs to be asked, who is buying into this overvalued market right now? The first one being the Federal Reserve. They're currently printing money in order to buy corporate debt and buy ETFs. Whether or not this is good monetary policy has yet to be seen. We don't know what the consequences of this will be in the long term, but in the short term, it's causing the stock market to become overvalued. Additionally, there's still people out there who have a lot of money, and they have no problem buying into this overvalued market. I just read this article that Saudi Arabia just pumped $7 billion into some of America's best-known companies. They bought minority stakes in Boeing, Facebook, Disney, Starbucks, and Citibank. Generally, everyone knows that the stock market should go up, that the stock market going up is good for people, but you have to think about this critically. Who actually does benefit from the stock market going up? It benefits the people who sell all of their shares, the people who get out of the market. You want to sell high and buy low. So, in my opinion, the fact that it shot up so fast, so soon, there's a lot of people right now at these companies that are failing, that are doing miserable, and it's kind of a everyone for themselves. I think there's a lot of people with serious investments in the market who are saying, okay, I need to get out. What is my get out price? And if the market starts turning again, like it did 2 months ago, then I think there will be people who will leave the market and not come back anytime soon. That is pure speculation on my part. Obviously, I don't have any kind of crystal ball where I can predict the future. I'm just thinking, how do humans ordinarily act? And if I was somebody heavily invested in the market who was thinking about retiring soon or getting out or liquidating in order to buy real estate or some other asset, I mean, now is a good time. And then finally, without getting too political, I want to talk about our nation's response to this pandemic. And there's just a significant percentage of our population who do not take it serious. They never took it serious, and they won't take it serious until they are personally affected by it. Here is an article by a rideshare driver who thought it was a hoax. He thought it was fake. And then both he and his wife contracted it. And only after he almost died from it did he actually say, whoa, this is a real thing. We all need to be taking this serious. This is kind of a morbid topic to talk about, but I do need to just touch on it to show you how bad this pandemic really is. This chart is the daily deaths per day of Americans, and there was a peak or a high point on April 21st. 2,683 recorded deaths. As of yesterday, Sunday, there was 1,602. How well are we doing with everything virtually being shut down the last 2 months? The only thing we can do really is compare how we've responded to this with other nations. So here is a chart for the daily deaths for Italy. They peaked on March 27th with 919 deaths. As of yesterday, they had 242. There is a very clear and distinct downward trending line, Italy's done a pretty good job of getting the death rate down to an almost insignificant number. They've reduced it to roughly a fifth of what it was at its peak. Likewise, we can also look at Spain. Spain peaked on April 2nd with 961 deaths, and as of yesterday, they had 138. So once again, a more than a 5x reduction in the daily death rate. It's a clear downward trending line. And when we go back and look at America, once again, the peak 2600, as of yesterday, 1600. We didn't even have it. The other countries, almost a 5x reduction. We did not even cut the daily death rate in half. So even with everything virtually shut down for 2 months, we barely even budged the needle. And this is because a large percentage of our population was not taking it serious. They either thought it was a hoax, or they didn't think that it was any worse than seasonal flu. They refused to social distance. They refused to wear a mask. They will not listen to medical experts. And I just don't think the market has priced this in, this new reality that America is going to face. I think large portions of the country have just given up. We're not going to shut things back down until the hospitals are overflowing. I think once the hospitals reach their maximum capacity in a local area, then on a local level, either city, county, or state, they will shut things back down. But once again, it takes 2 to 5 weeks for someone to expire from getting this virus. So once your hospital has reached capacity, you're still going to see an increase in cases for 2 to 5 weeks past that. And even if we want to be conservative and say that the rate that we're losing Americans right now is the rate that we will maintain with everything opening back up for the rest of the year, there are 210 days left in the year. 210 times 1,500 deaths a day, that is 315,000 people. Add that to the 90,000 that have already died, and that's 405,000 dead Americans this year. And once again, that number is conservative. Let's say with opening everything back up, we get the death rate goes up to 2,000. This now takes us to 420,000 deaths by the end of the year, before the vaccine shows up. Add that to the 90 we've already lost, that is over 500,000 Americans dead. So to come full circle, once again, the reason why I sold all my stocks is because I just don't think that the reality of what is to come the rest of the year is currently being priced into the current market price. I do want to get back into the market, but I'm doing a risk versus reward analysis here. Yes, the market could go up another 10% back to all-time highs. That doesn't make any sense. It is still possible. And more than likely, it could drop another 30%. The date that I'm watching out for is the end of June. So as states begin to reopen today, it's going to take 2 to 5 weeks to see if people start dying at an increased number. So 2 to 5 weeks from today is the end of June. Likewise, the end of June, a lot of companies will be giving their second quarter earnings reports, and it's going to be a bloodbath. So if states or cities or counties or on a local level have to re-shut businesses down, on top of we get these earnings reports, I think that this mega drop is coming towards the end of June, maybe beginning of July. And I personally would rather just hold on to my cash because I was only planning on investing short-term, 3 to 5 years. I would rather hold cash now than get into a market position where I don't want to sell at a loss. What number am I looking for? Well, the market bottomed at 2,200 before Congress passed the CARES Act and then injected everything with stimulus. Maybe if the number gets back down to there, I will feel comfortable buying back in. But that really is the minimum. Ideally, it probably could go lower than that. Final thoughts, I can't predict the future. However, when investing, there always is this element of risk, and you need to do your own cost analysis to say, can I tolerate this risk? If I buy in and then things go negative, am I okay sitting in that position long term so I don't take a loss? Okay guys, that's my thoughts for today. Let me know what you think in a comment down below. If you like this video, give it a thumbs up so the algorithm knows it's good. In addition, consider subscribing to my channel if you aren't already subscribed. I talk about finance, investing, and credit topics. And until the next video, take care.